You're watching Business Incorporated live on Channels Television. Coming up, Africa defies global trend with funding for startups surging. And Egypt's non-oil private sector activity shrank again in July, but at a slower pace than June's two-year low. Plus, oil prices fall as OPEC Plus decision on production takes center stage. Hello and welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday. Starting with African markets, the NGX has sustained Tuesday's positive sentiment. As at intraday, the all-share index slightly up, about 0.02%. While South Africa's index is also in the green, though its index remains high at over 68,000 points. In Egypt, the EGX 30 was trading positive on intraday, gained about 0.82%, while Kenya closed significantly in the green on Tuesday, up 1%. And moving to the Middle East now, investors have played more negative sentiment. Majority of the major markets we track are in the red. Intraday, Abu Dhabi was down about 0.47%, while Dubai followed closely, down 0.71%. In another region, Saudi Arabia was also down about 0.64%, while Qatar was in positive with a gain of about 0.62%. And now let's move on to Europe. We have DW's Ben Fadjolin has more on the House Speaker Nancy Pelosi's visit to Taiwan, which is being tracked closely by traders in Europe. Let's bring in Ben now. So Ben, tell us about the economic tremors this story is creating.
Well, the potential is there for huge economic consequences. It all depends upon the diplomatic reactions, and Pelosi's visit to the self-ruled island has certainly infuriated China. That's what it says, at least. Its actions are more telling at the moment. It does consider Taiwan to be its own territory, but there have been no immediate signs of military action. There have been threats, of course, for countermeasures, and Beijing certainly has held out the prospect of military action, but so far we've seen those threats for decades. Beijing saying that it would enforce its Communist Party's claim to the island by attacking. And before Pelosi's arrival, China did send out fighter jets along the line dividing Taiwan, the Taiwan Strait, which is an important shipping lane in global terms. After the arrival of Pelosi, Beijing blocked thousands of Taiwanese food products, which is going to hurt Taiwan. The two sides have no official relations after having split back in 1949 following a civil war, but what they have built up is a multi-billion-dollar business relationship. So Beijing has tried to at least warn Taiwan. What it hasn't done is it hasn't disrupted the flow of industrial components like processor chips. That would send shock waves not just through Taiwan and China, but through the global economy, and a very shaky global economy right now, to tell you the truth. Taiwan is the biggest semiconductor manufacturer in the world. Beijing has announced several days of military exercises with artillery fire in the waters around Taiwan, and that could delay or disrupt shipments to and from the island, remembering that Taiwan's not just a huge semiconductor manufacturer, but it's also one of the globe's biggest traders.
Right, all eyes on geopolitics right now, but could China afford to punish Taiwan at a time of such low, domestic growth?
Well, the simple answer is no. Growth is sputtering in China. It's suffering from a credit crunch, a real estate crisis, a costly zero-COVID strategy, which goes on. It's also expanding its surveillance state, which is not only costly, but it also means fewer freedoms for the Chinese, less financial leeway, fewer investment opportunities. All of that could create civil unrest. And on top of that, the population is beginning to shrink and could begin to shrink rather in the next couple of years. So that would put a lot of pressure on workers to support what is an aging population and could create the perfect storm. All the while, China is set to post its lowest growth figures in 40 years. Officials are backing away from their growth goals of around 5%. What we could see is something realistically between 1% and 2% growth, and that would be a huge shock, and mean that things really change economically for what has been the global economic engine of world growth, really. As far as two-way trade goes between Taiwan and China, it was up by a quarter last year to some $328 billion. Taiwan has the technology that the mainland simply can't match, and it produces half the world's chips. So what we also have is the problem that Taiwanese-made chips are needed by Chinese factories to assemble the world's smartphones and other electronics, not just consumer electronics, but also military hardware, health systems. So this is important, or would be important, if things really got bad and some sort of conflict did break out. It's also extremely important in fighting off the global COVID crisis. As one economist put it, China and the global economy cannot function without Taiwan's chips.
Yeah, and I know markets are reacting to all this geopolitics happening right now. How volatile has the stock market reaction been?
Well, it's been fairly volatile. Yesterday, Hong Kong and Shanghai led losses of over 2%, Taipei and Tokyo more than 1%. Today, there's been a rebound, slight gains. Pelosi's visit, although highly symbolic as far as democracy goes, was uneventful in the end. I mean, there's been no military action, nothing, no mishaps, military mishaps. But some Asian traders don't necessarily see the benefit of this trip, although it is the most high-profile trip of an American lawmaker in 25 years. So there have been small gains, which are far from a vote of confidence in the global economy. And Europe's stocks also fell lower as they opened today. This, of course, is not just about the tensions in Taiwan. This is so much more about tensions between the US and China, the world's top two economies. And any potential disruption is going to, of course, add concerns over a weakening global economic growth.
Right, that's Ben Fragilin right there in Berlin. Thank you so much, Ben. All right, now let's head on to London. We have Juliana standing by right there in London. Great to have you, Juliana. Well, let's start off now with data. You know, coming from the UK, we see that the service sector has grown at its slowest pace in about times not seen recently with COVID-19 restrictions. How has this been digested over there in the UK?
That the business team look fantastic in their new studios. I'm slightly jealous here. We're obviously in need of an upgrade in London. But you're right, we've been talking about data constantly and consistently, but I think the PMI service sector data is an important one. The PMI are able to have a really forensic look at how the private sector is coping at the moment. And we know that Britain is a service-based economy, pretty similar to the US and Hong Kong, because it contributes about 3/4 towards GDP, so about 80% of GDP. So this is the big one that everyone looks at. It's come in July, and it's down from June, from 53.3 in June to 52.5 in July. Now, it's worth pointing out that, of course, 50 is that really important benchmark. So anything above 50, even if it has been dropping, does still indicate an expansion, and anything below 50 indicates a contraction. We're not where Germany is yet, which is seeing its service industry shrinking, but there are some concerns, and the concerns is that perhaps the service sector is losing the momentum. It was really high after the majority of restrictions were lifted. Just after Christmas, lots of people were out buying, spending upon services. But, you know, a term we're always talking about at the moment is inflation. And inflation is not just hitting consumers, it's hitting businesses, and they are starting to pass on those costs. And some people just cannot afford to purchase certain things at the moment. They're deciding to go without certain services, and that's obviously been reflected in this data released by S&P Global, which is a concern, particularly because we know that it's been forecast things are going to get worse. So it'd be interesting to see whether or not Andrew Bailey, the Bank of England governor, and the rest of the 8-strong MPC committee members do react to what was announced earlier today. But it is starting to feel as if, you know, we're right in the gear of the summer of discontent that all economists had warned was coming at the beginning of the year.
Yeah, I guess it's growth, but growth at a slower pace at this time. But, you know, I saw another interesting story there. We see house builder Taylor Wimpey giving employees about £1,000 of cost of living bonus. Quite interesting. And where are they getting that money from?
Yeah, quite interesting and quite helpful, actually. Hopefully anyone else watching is taking note, because this is exactly what people need at the moment. But no surprises from Taylor Wimpey, which is Britain's biggest house builder. As you know, Laddie, something we've also been discussing quite extensively is that the housing market has been very robust. It doesn't seem to have burst. Lots of people are saying it's going to burst anytime now. It hasn't really since it came out of lockdown. It was one of the first sectors to come out of lockdown in 2020. And it has been doing particularly well. Taylor Wimpey, they are a FTSE 100 company. I believe they've got a market capitalisation of about £3 billion, so certainly a heavyweight. And in their trading update today, they revealed to investors, even though it was slightly lower, they still made revenue of over £2 billion in the first half of this year. Not only have they reinstated dividend, and I believe they've increased dividends for shareholders by about 10%, they've also added this bonus, shall we call it, cost of living bonus for about 90% of their employees who are earning less than £70,000 a year. They will be receiving this in equal instalments from September to February, so £200 extra at the end of your pay packet is good, you know, and it seems as if investors were happy with that, which is why they're one of the top risers on the index today.
I guess investors are happy, the employees are also happy at the same time. Quite good. Well, how are the markets looking generally?
Not great. The FTSEs failed to gain momentum. There were some falls on Wall Street, and I think London have picked up on that. So at intraday, the all-share is actually up slightly, 0.02%. Though the FTSE 100 is down by 0.01%, and the FTSE 250, that domestic market, slightly up by 0.16%. In the currencies market, though, the British pound is trading up against the US dollar by 0.41%. Up against the euro by 0.01% and up against the Japanese yen by 0.37%, Laddie.
All right, Juliana,
enjoy your new look. It's looking great.
Don't be too jelly. Yours is coming. Thank you, Juliana.
I know.
All right. Okay, bye-bye. All right, now, so let's move on to other stories. Now we see Asian markets mostly rose. Mainland China indexes gave up early gains and turned negative Wednesday as geopolitical tensions between the U.S. and China intensified over U.S. House Speaker Nancy Pelosi's visit to Taiwan. Shanghai Composite was 0.71% lower at 3,163 points, and the Shenzhen component lost about 1.14% to 11,982 points, dragged down in part by Chinese battery maker and Tesla supplier, contemporary Amperex Technology. Shares dropped by nearly 4% Tuesday before Pelosi's arrival. Both the Shanghai Composite and Shenzhen component fell as much as 3% in the trading session. Hong Kong's Hang Seng Index advanced 0.33% in the final hour of trade, while Taiwan's TAIEX recovered from slight losses to close at 0.2% higher at 14,777 points. Elsewhere in Asia, the Kospi in South Korea gained about 0.89% to 2,461 points, and the Kosdaq was 1.37% higher at 815.36 points. Japan's Nikkei 225 rose 0.53% to 27,741 points, and the Topix index was up 0.27 at 1,930 points. All right, we'll take a break now. When we come back, more stories on the African continent. Do stay with us. This is Business Incorporated. Welcome back. You're still watching Business Incorporated live on Channels Television. Now let's check out more markets, starting with the U.S. here, as traders try to regain their footing following back-to-back losses. So futures tied to the Dow Jones Industrial Average, that was down about 0.44%. Then the S&P and the Nasdaq rose. Let's get yesterday's close now from our correspondent, Maria Bird.
The U.S. stock market fell on Tuesday as the Dow Jones dropped by 400 points, closing at negative 122%. And the S&P 500 was also down, closing at 0.66%. And the heavy tech Nasdaq was down by 0.16%. Investors are skeptical about the growth of the U.S. stock market. It is clear that the Federal Reserve has announced that they will fight inflation with everything they have, even if it means stunting economic growth. It is also clear that the U.S. marketplace was impacted by U.S. House Speaker's visit to Taiwan, as this has added to the geopolitical landscape and tension between the U.S. and China. The White House was a bit concerned about the visit, and only time will tell if this will continue to have an impact on the U.S. economy.
That was our correspondent there, Maria Bird, with yesterday's close in the U.S. Now to our next conversation. It's high stakes as Kenyans head to the polls August 9th. That's next week. Let's get a sense of how things are looking for the markets and businesses right there in Kenya. Joining us now is Steve Ogutu, communications and development expert in Kenya, joining us via Zoom. Great to have you on the program. Hello, Steve. Can you hear me? Hello, Steve.
Can you hear me now? Sorry.
Okay, I can hear you now. I can hear you now.
Have you and be on your show.
Oh, great. Great to have you on our new set, Steve. You're the first one I'm launching on this show. Thank you so much.
Oh, wow.
Yeah, it's an honor for you.
Then it's a real pleasure now.
Exactly. Exactly. Thank you so much. So what's the mood like in Kenya? I know it's hot right now as elections coming up next week.
Wow, I mean, it's there's been a bit of tension here and there. Of course, that is expected with every election. But the good thing with this election is we don't see much chaos. We don't see much political violence. There are some pockets of violence here and there. And of course, because of that, the investors who might, not be comfortable in bringing the investment into the country. There are businesses that are a bit worried about this period, especially, we are going into an election next week. And so it's a wait and see for most businesses here. But the situation is not as bad as it has been in the past elections.
Quite interesting. That's actually good. That's actually good news, Steve. But right now, I know the stock market in Kenya has not, looked the best for a while. That's been trending downward. How is it looking, pre-election?
Okay, it still doesn't look so good. And of course, I think the contributing factor for this is the campaigns that have been going on in the election that we have coming up. We have, like I said, some bit of political chaos here and there. And I think that in itself really somewhat scares investors and businesses from investing heavily into the Kenyan market. But this year, I don't think we are going to have much tension to a point where businesses are going to be severely affected. Of course, when we look at the 2017 election, what they call the Nairobi Stock Exchange Share Index, that looks at that tracks the capitalization of companies here in Kenya. The market scored at 170.2 thereabout, which was a big improvement compared to other years. And so this year also we expect that the market isn't going to shrink a lot, especially given that the government of the day and the opposition leader in Kenya here, decided to come and work together after the 2017 election, and because of that, there has been some stability in terms of political stability, and with that, there is some confidence from a good number of investors who see Kenya as a place to come and invest. But of course, like I said, with this campaign period, there's a bit of slight tension that might scare people here and there, but I don't think it's going to be as much as the previous years.
Right. Well, it'll be great to see in Africa, even though elections are coming, everything is still peaceful. People can go about their businesses. But how are businesses, managing? Right now, I heard there were some closures, coming, some businesses closing up, there in Kenya because of the elections. How's it looking?
Right. The Kenya politics, just as is the case in many parts of Africa and maybe the world, is slightly ethnic, So there are areas where certain political parties have huge following, and therefore their opponents are not welcome, or people from certain ethnicity are not allowed to be, especially during elections. But like I said, we have pockets of that this year, and it's not as much as it has been the previous years, and it's because of the coming together of President Kenyatta and the Right Honorable former Prime Minister Raila Odinga, who is the opposition leader, because he's a man who really, commands following from across the country. So with them coming together and having that historic handshake in 2018, it somewhat quelled tension in so many parts of this country. But yes, we are seeing some pockets of that bit of violence and businesses shutting down. They're not sure about how things are going to turn out during this election yearing period. So that is there, but it's not as much as it was a couple of years ago.
Right. Okay. All right, Stephen. I was going to ask you who you're rooting for. But I'm not going to put you on the spot. Maybe later you'll tell me who you're rooting for.
Now, let me tell you. Let me tell you. I think this year's election for Kenyans, it's about who they can trust. And I'm happy that for the first time, I think our politics is centered around issues, the economy of this country. We've been battered just like any other countries with the COVID-19 and all that. And so many people lost jobs, businesses were affected. And so the point is, the campaign, the central theme across all the top political parties here is the economy. How are they going to create jobs and create industries that are going to support Kenya's economy? And so Kenyans are looking for someone who they can trust with their future, someone who they can trust to create jobs, someone who they can trust to create stability, and someone who they can trust to attract investment from other parts of the world. And so it's up to Kenyans to decide, but we are hoping for a very peaceful elections.
All right. I wish you and your country a peaceful elections come August 9th. Thank you so much, Steve Igutu, our development expert. It was great having you.
Thank you very much, Nadine. Have a good afternoon. Bye.
Thank you. All right, now moving on to other stories. Funding for startups in the world's second largest continent more than doubled to $3.14 billion in the first 6 months of the year. According to research firm Africa, the big deal compares with a decline ranging from 3.7% in Europe to 43% in Latin America. Caribbean. Analysts say macro trends affecting developed market tech names will be less impactful to Africa, like Klarna, PayPal, and others being hit by fears of inflation. What that means for consumer transactions. According to visual capitalists, Africa's advantages range from the underdeveloped nature of its market to a relatively young population who are quick to grasp the technology offered by startups. And Egypt's non-oil private sector activity shrank again in July, but at a slower pace than June's two-year low, as demand remains weakened by inflation and shortages continue to put pressure on supply. That was a survey showed on Wednesday. Egypt's non-oil private sector activity shrank again, but at a slower pace. And obviously, analysts are seeing this as a sign that Egypt has to step up when it comes to providing more support for businesses at this time. The S&P Global Egypt Purchasing Managers Index strengthened slightly to 46.4% from June's 45.2 points, remaining below the 50.0 line. And that's it on Business Incorporated. Thank you so much for watching the first Business Incorporated show in our new studio. Remember, I'm Ladi Williams. Don't forget to join us on YouTube to watch this again and subscribe so that you can not miss any of our shows. Thank you so much for watching. I'm Ladi Williams. Bye for now.